February 15th, 2026. You're going to remember this date for the rest of your life. Not because gold hit $5,000, not because silver reached 77, because this is the weekend the old monetary system visibly broke and the new system started taking shape. Markets are closed. But billions of dollars in capital are about to move Monday morning based on decisions being made right now. Institutional desks are running scenarios. Family offices are calling advisors. Sovereign wealth funds are updating allocation models. And retail investors, most of them, are sitting frozen, unsure what to do next. This final video is your complete action plan. Everything you've learned across 23 videos comes together here. By the end, you'll know exactly what to do Monday morning. Not eventually, Monday. Let's finish this. Let me put this weekend in context by showing you what actually happened in markets this week. Monday, February 10th. Gold opened at 4,900, silver at 72, institutional buying visible across futures and ETF flows. Tuesday, February 11th, BRICS payment system expansion announced, 15 countries joining, gold pushed 49.75, silver 74, flight to hard assets accelerating. Wednesday, February 12th, ECB crisis escalated, Italian yields hit 6%, emergency ECB meeting announced, gold touched 5,100 intraday before pullback to 49.50. Thursday, February 13th, U.S. Treasury auction showed weakest foreign bid since 2021. Yields spiked. Fed issued calming statement. Gold volatility extreme. 4,800 to 5,200 range. Friday, February 14th. Everything broke loose. China revealed actual gold reserves. 14,000 tons, not 2,000. Market recalculated every sovereign balance sheet globally. Gold gapped to 50.42 at close. Silver to 77.36. And now it's Saturday. Markets closed. But the information is processing. Monday morning, when Tokyo opens, then London, then New York, the repositioning begins. Here's what different types of investors are doing right now, based on what I'm seeing from institutional sources and advisor networks. Central banks, weekend conference calls happening, discussing whether China's revelation changes their own gold purchasing pace. Consensus forming, increase buying, don't wait for pullbacks. Sovereign wealth funds, running portfolio optimization models, current allocation to gold, likely 5 to 8%, models suggesting increase to 12 to 15%, silver allocation being added for first time, 2 to 3% targets. Pension funds, emergency investment committee meetings, discussing whether 5042 gold changes their previous not above 3,000 buying limits. Debates about inflation protection mandates forcing action. Hedge funds, already positioned, the smart ones bought months ago when gold was 35 to 4,200, now deciding profit-taking levels versus letting winners run. Family offices, calling private banks. Get me allocated gold storage, get me silver. I don't care about premiums, I need exposure Monday. Retail investors, paralyzed. Half think they missed it, half think it's a bubble. Almost none have clear action plans. That's the opportunity. Clarity wins when others are frozen. Here's your complete Monday morning action plan based on where you are right now. If you own 0 precious metals, Monday action. Open a brokerage account if you don't have one. Buy GLD, gold ETF, and PSLV, silver ETF, immediately at market open. Allocation, start with 5% total portfolio, 3% gold, 2% silver. Execution, market order, don't try to time it. Don't wait for a pullback that might never come. Reasoning, you're uninsured against the exact crisis that's manifesting. 5% is conservative but gets you in the game. If you own some precious metals, 5-10% allocation, Monday action, rebalance toward target allocations based on ratio analysis from video 23. If you're currently 70% gold, Chatawir, 30% silver, shift to 50-50. If you're currently all gold, add 20% silver. Execution, sell small portion of gold, buy silver, or add new capital to silver preferentially. Reasoning, the gold-silver ratio at 65 is compressing toward 40. Silver will outperform from here. If you own significant precious metals, 15 to 25% allocation, Monday action, hold, review. Don't panic trade, risk check. If metals are now above 25% of portfolio due to appreciation, trim back to 20%. Deploy proceeds to undervalued productive assets. Execution, sell just enough to rebalance. Keep core position intact. Reasoning, you're properly positioned. Don't let volatility shake you out of winning positions. Now let's talk about the specific stocks and instruments to use for Monday execution. For gold exposure, physical. If you want actual metal, expect 4 to 6 week delivery and 8 to 12% premiums. Only suitable if you're patient and committed to long-term holding. GLD, SPDR Gold Trust. Largest, most liquid gold ETF, tracks spot price closely, easy to trade, acceptable for most investors. PHYS, Sprott Physical Gold Trust, actually owns allocated bars. better structure than GLD for long-term holders, slightly less liquid, gold mining stocks for leverage. Newmont, NEM, largest, safest, lowest leverage, Barrick, gold. Second largest, good balance sheet, Franco-Nevada, FNV, royalty company, high margins. For silver exposure, physical, same challenges as gold, but more pronounced. Premiums 10 to 15%, delivery delays longer. PSLV, Sprott Physical Silver, best silver ETF structure, actually owns metal, redeemable for physical and large quantities. SLV, iShares Silver Trust, larger, more liquid than PSLV, structure not as good, acceptable for trading positions. Silver mining stocks, for maximum leverage, Wheaton Precious Metals, WPM, streaming, highest quality First Majestic, AG, primary producer, high leverage Pan American Silver, PAAS, diversified, mid-cap. Let me address the fear that's stopping most people from acting Monday. What if I buy Monday and it crashes Tuesday? Possible. Volatility will be extreme. Gold could pull back to 4,800. Silver could touch 70. But here's what you need to understand. The fundamental reason for the move, sovereign balance sheet stress, currency debasement, supply deficits, monetary system transition, didn't change. A 10% pullback doesn't invalidate the thesis. It's noise. If you buy Monday and it drops, you dollar cost average into the pullback. You don't panic sell. What if this is the top and it's all downhill from here? $5,000 gold is not the top of a monetary system transition. It's the beginning of the repricing phase. Could gold peak at 5,500 and correct to 4,200 before going higher? Yes. Does that mean you shouldn't own any? No. Your job isn't to buy the exact bottom or sell the exact top. Your job is to have appropriate exposure through the transition. What if I'm too late? You're not too late to get exposure. You're late to get the 2,800 to 5042 move, but the move from 5042 to 7,500 or 8,500 is still ahead. That's a 40 to 60% return from current levels. Not as good as the 80% you missed, but still better than 0% by staying in cash. Here's what I'm doing personally Monday morning for full transparency. I own gold and silver. I positioned months ago when gold was 3,800 and silver was 47. Monday, I'm doing 3 things. 1, checking my portfolio allocation. If metals are above 20% due to appreciation, I'll trim 5% back and redeploy to undervalued positions, probably quality dividend stocks that sold off during the flight to safety. 2, adding to my silver mining stock positions, specifically First Majestic and Wheaton. The ratio trade from video 23 is my highest conviction idea right now. 3, setting alerts. I want to know if gold breaks 5,500, I'll trim some, or if it crashes below 4,800, I'll add some. That's it. I'm not panic trading. I'm not trying to catch every tick. I'm making disciplined adjustments based on frameworks we've developed across 24 videos. You should do the same. Have a plan, execute Monday, then hold your discipline through the volatility that's coming. February 15th, 2026. The weekend everything changed. Monday morning, capital moves, allocation shift, positions are established that will compound for the next decade. You've watched 24 videos. You understand the why, you understand the how, you understand the what. Now you just need to execute. This isn't about getting rich. This is about not getting poor while everyone else gets poor. This is about recognizing that the monetary system you grew up with is transitioning to something new. And the people who position for that transition, with discipline, with clarity, with appropriate exposure, are the ones whose wealth survives and grows. Monday morning, execute your plan. The information is here. The opportunity is available. The choice is yours. Stack accordingly.